Welcome, everybody, to this week's edition of Market Insights. Let's take a look at what's going on with the markets, what's moving the market. What should you be doing at this point? Things have definitely shifted a bit for the better. We would expect that this time of year. It is October the 17th. I am fresh back from a week in Florence, Italy. What a fantastic place that is. If that's not the best city in the world, I don't know what is. Just a quick reminder that everything we do here is for educational purposes only, not intended as investment advice. So when you look at the overall market, what should your considerations be? First of all, what are the fundamental influences that are impacting market direction? Then, what is the market actually doing? Which sectors are performing? Which sectors are not? We're going to take a look at all of this. And then, which stocks have momentum? So what's moving the markets? Well, the war in the Middle East rages on. Hasn't seemed to impact the market much. It did bump up oil prices there. And of course, the defense stocks, the Lockheed Martins, the Raytheons, and so forth benefit from this, but it hasn't really had some huge negative impact on market conditions. Got a busy earnings week kicking off. That's kind of nice. It'll be great to talk about earnings for a while instead of the Fed. In normal market conditions, it's all about how much money companies make. For the last year and a half, it's been about what the Fed's going to do with interest rates. Bitcoin, and I'm not a big Bitcoin fan, by the way. I prefer things where I can do some analysis, like on a stock. How much money does the company make? What do their revenues look like? How are they doing compared to their competitors, et cetera? You can't do any of that with Bitcoin, but it's noteworthy. It hit 30,000. The 10-year Treasury inches higher. It's at 4.718. I'd really like to see that get below 4.5. I think it's going to have to in order for us to have any kind of sustained rally. And oil's pretty steady at about $87 a barrel. So what are we watching this week? Well, today, Fed President Patrick Harker speaks, going to talk about the economy. We have the Empire State Manufacturing Survey that came out. It was a negative number, but a little less negative than anticipated. Tuesday, lots of stuff. Retail sales. Fed Governor Michelle Bowman got a lot of Fed speak tomorrow. On Wednesday, housing starts, and we got the Fed Bay's book talking about the state of the economy. And on Thursday, initial jobless claims come out, as they do every Thursday, and existing home sales. And the good chairman, Jerome Powell, will be making a speech, and nothing worthwhile on Friday. Last week's Heatmap, boy, Lilly continues to just surge ahead with their suite of pharmaceuticals. Broadcom had a good week. Microsoft and Apple were pretty flat. Adobe up nicely. Amazon up nicely. Tesla, which has announced its earnings this week, they were down 3% on the week. Financials doing a little better. Wells Fargo got a nice little pop, but nothing terribly exciting. Here's the year-to-date heat map. There have been some great opportunities out there. Tesla up 103%, Lilly 67%, Meta 162%, Google 57%, NVIDIA 210%. So if you're in the right stocks and then you knew something about options, so being able to pick stocks and utilize options could have made you a small fortune this year, and I hope that it did. Market breadth, particularly I like to pay attention to 52-week highs versus 52-week lows. clearly shows us we're not out of the woods. 80 new highs, 306 new lows for the week. That's on the New York Stock Exchange. On the NASDAQ, 136 new highs, 739 new lows. Advancers versus decliners on the NYSE, pretty close, but not good on the NASDAQ. So we need a rebound. Last week's winners, well, Northrop Grumman, they benefited from conflict in the Middle East. Marathon Oil, big winner. A lot of energy companies did well. There's General Dynamics, Lockheed Martin, so oil and defense. Finding returns for the year, it's all large cap growth, 28%. You know, the medium-sized companies, less than 10%. Small cap might as well have been in a checking account. Utilities have been dreadful, utility stocks this year, just awful. And what's sad is that you have seniors who are told by their brokers, well, if you want to be defensive and get a dividend, go into utilities. They've gotten crushed. Hedge funds are shorting consumer staple stocks right now. That doesn't make a lot of sense to me, but a lot of what hedge funds, they go chasing returns. And I frankly think a lot of them are pretty desperate right now because they've missed out on some of the big gainers for the year. Independent investors feeling a little more bullish, and they should. We're going into now October, and then November, December, and January are great months in the stock market. A lot of small business pessimism out there. I don't blame them. You turn on any financial channel, boy, it's all news and doom and gloom. Inflation expectations have jumped. So they're expecting next year that inflation is going to be sitting at 3.8%. I hope not. It means the Fed's going to continue to stand on the gas. Stocks trading above their 200-day moving average. Dismal, but a very contrarian bullish signal because it's not going to stay down here, especially with the seasonality that we're looking at. Investor sentiment moved from extreme fear to fear. And some earnings this week, Tesla and Netflix, I will be particularly interested in. And TNT will be coming out on Thursday, American Express on Friday. So, we've got some pretty significant earnings that will now start moving this market based on the reports. Let's take a look at the charts, see what's going on out there. Start with the SPX, which is the S&P 500. Big question, can it crawl above the 50-day moving average, which can act as a level of resistance, and has here recently? We see that the 50-day, the slope is still downward, but it looks like it wants to flatten out. We're at 43.81. Not a bad level. We need to get above 4,500 and then ultimately 4,600 to get into really bullish territory. How about the Qs with big tech? We are above the 50-day moving average. That's a good sign. And then small cap represented by IWM, the Russell 2000, not so much. Boy, it has struggled, and it's been the laggard this year. So with earnings coming out, seasonality now in our favor, if the earnings hold together and the Fed doesn't do anything dramatic, I think there's a good chance this market goes higher from here and probably closes around 4,600 for the year. So we'll be keeping an eye on that. We'll be back with you again next week. And until then, stay blessed. Bye for now.